Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring, and today is Saturday, September 2nd, 2023. Hope you're doing well. Thanks for tuning in today, and I appreciate you being here for my weekend review podcast. In this podcast, the format is as follows. First of all, we are going to run the U.S. legal disclaimer. Secondly, we're going to come back. We're going to take a look at all the trades that I made last week, both on the daily charts and the weekly charts. We're going to talk about when I entered the trade, why I entered the trade, what the strategy that I was using to enter the trade, and then most importantly, how I am going to manage the trade going forward. If it's a loss, if I've done my homework correctly, I'm out quickly with a small loss. If I'm correct, I'm going to be able to stay in the trade for a while and have a larger trade. What you'll see with my trades is when I'm correct, I'm in the trade for a while. When I'm incorrect, I'm out of the trade quickly. And that's the important thing about trading. You need to be very impatient with your losses, and you need to be very patient with your winners. And you need to have a process that you follow so that you know what to do regardless of what the market's going to do. So after we go over all of the trades that I took last week, we're going to do a little bit on trader psychology. Most important part of the most important skill in trading is the skill of being patient and following your process. So I always like to teach trader psychology. It's helpful for me, and I hope it's going to be helpful for you as well. After that, I have gone down through my master watch list, both on the daily time frame and the weekly time frames, and I have identified some potential trades that I may be interested in taking next week. At the moment, they're not where they need to be. They either need to go higher or they need to go lower, but I will identify those levels and I will explain why I will consider taking these trades next week. All right, so I hope you're going to find it helpful. Let's get started. Let me get the U.S. legal disclaimer out of the way. It's about 40 seconds. Hang tight, and I'll be right back, and we'll get going.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
All right, let's get started. Now, as I go through these different trades, let's keep in mind that whenever I get into a trade, whether it's a long trade or a short trade, let's just take a long trade for example, I'm looking for some kind of rejection of a level below me, some kind of key level like a 30 RSI, a 250-day moving average, a 300-day moving average, a 200-day moving average. Those are called deep dip buys, and I'm looking for a rejection of those levels. Now there's other kind of trades, even to the long side, where they have to go up, whether maybe I'm triggering into a V1 or a V2. But regardless of the trade, these are the steps that I take. The first step, most important step, well, the very first step is seeing some type of level rejected, a major key level rejected. If that is rejected and I have a good risk to reward ratio, then the first thing I need to do is position size based upon the volatility of the market. What does that mean? Sometimes markets are volatile, sometimes they're less volatile. If they're volatile, what I do is I take 1% of my total capital, I divide it by the value of the 2 ATR. The 2 ATR factors in the volatility of the market. So if there's more volatility, it's going to have me buy fewer shares. If there's less volatility, I'm going to buy more shares. So I position size based upon what the formula teaches me. I place my emergency stop 2 ATRs below my entry. Then I have an end of day stop as well. And the end of day stop, if my risk to reward ratio is correct on the trade, is going to be very close to my entry point. So if I'm wrong quickly with a very small loss. If I get to my emergency stop, then I've lost 1% of my capital. Never fun, but it's not going to blow up your account by losing 1%. By the way, hitting your emergency stop only happens about 5% of the time. If you have a loss, 95% of the time, it's going to be a smaller loss with your end of day stop. So find the entry, look for the rejection of a key interest, look for rejection of a key level, position size correctly, place your emergency stop, place your end of day stop. Then to the upside, if it starts moving my way, I always take partial profits if the price moves the value of 0.45 ATRs from my entry, from the close of the previous day's close. So if it moves the value of 0.45 from the previous day's close, I take partial profits, 10% of whatever the positions size that I have remaining at that moment. Then if we get up to a trailing stop level, which is 1.5 ATRs above my entry, then I go into trailing stop mode, which means that if I have a close below a previous bar's low, I get out of half of the remaining shares that I have. And then if it continues higher, if it gets above the 65 RSI level, then the 5 EMA comes into play. If I have a close below the 5 EMA, I get out of the entire position. If it does not reject the, or if it does not close below the 5 EMA and continues to move up, then the 70 RSI is a key level. If it rejects a 70 RSI level, I'm going to get out of half of whatever I have remaining again. And then if I get a close below a previous bar's low after rejecting the 70 RSI, then I'm completely out of the trade. Now, I know that probably sounds complicated to you. It's not, I promise. And as I go through these trades here, I'm going to show you that exact process, both to the upside and to the downside. So regardless of whether I'm long, short, I use the same process. Identify the rejection of the level, position size correctly, place your emergency stop 2 ATRs below, have your end of day stop very close. If it moves up, take partial profits. If it moves the value of 0.45 ATRs from the previous bar's close, if it gets to trailing stop level, then I go into trailing stop mode, and so forth and so on. So it's not complicated. You just have to learn it, and that's what I try to teach here in this podcast, and I'll show you through all the trades what I'm doing. Do want to mention, and I'll talk more about it at the end of the podcast in case you're interested, but I do teach private one-on-one lessons, and I've taught students from all over the world. I've been teaching for many years. I love to teach, and I teach you all 5 of the different trading approaches that I use. And I think learning one-on-one with an instructor is the best way to learn anything. So if you are interested, my email is in the link of this description. Feel free to send me an email. We can start the process and talk. I think you'll be really glad that you took the course because you're going to really learn a skill. And from what I've been told, I'm a good teacher, and I think I am because I really do enjoy it. All right, so let's get started. Okay, here we go. Zions Bank. Now, I've been in this trade for a while, which tells you what? It tells you that if I've been in this trade for a while, that it's been a profitable trade, and this is a short trade. So back here on the 27th of July, we had a key level rejected. We had the 200-day moving average. This is the black line rejected. We also went over 70, under 70. So right there, that's telling me multiple levels above are rejected, and it's giving me the potential for a short position. Well, it was a little far extended from the 200-day moving average, so I waited for the next day to see if we'd have a bounce so I could get a better risk to reward ratio. And that's exactly what happened. I got short here at 38.20, as I mentioned before we started on the charts here. When I see the trade, I need a position size. So I took 1% of my capital divided by the value of the 2 ATR of that particular day. That shows me how many shares to buy. I placed my emergency stop exactly 2 ATRs above so that if it does get there, then I've lost that 1%. But where's my end of day stop? Well, why did I take the trade? I took the trade because of the rejection of the 200-day moving average. So therefore, if it closes above the 200, I'm simply out for a small loss. Now remember, if it moves the value of 0.45 ATRs from the previous bar's close to the downside, I'm going to take partial profits. And then I also talked to you about a trailing stop level. This is the orange line here, where it's 1.5 ATRs below my entry because this is a short. Make sense? So I got short here at 38.20. Next day went up a little bit, then came down my direction, took some profits off. The next day again, gapped up, came down, took more profits off. Got to trailing stop level. Now I'm in trailing stop mode. Now, if I'm in trailing stop mode and I'm short and I get a close below a previous bar's low, I get out of half, which I did here. So got to trailing stop level. Next bar here closed above the previous bar's high. I got out of half of the remaining position for a gain of 2.75%. Then we moved up a little bit. Then we had a big down bar, took some more profits on that. Then we came up, it started to flirt again with the 200-day moving average, but did not close above, so it kept me in the trade. And then we had started to have a nice move down. Took some more profits here. Took some more profits here. Definitely took some more profits here. So as it's going my direction, I'm locking in profits, reducing my position size, which reduces my overall risk. And now, over the past week and a half, of course, we've had this big rally up here, which has gone against me. But can you see the value in taking partial profits as it starts to move in your direction? I took a lot of profits down here near the low, which reduced my position size, and we've moved up. So currently, with the remaining shares that I have, still a nice trade, up 4.99%. But again, just want to point out how important it is to take profits when it's going your way, because usually inevitably it's going to move back up against you. And I've locked in these profits. The market can't take it away. In this big up move here, I've had fewer shares, so it doesn't hurt me as much. So the first half I got out for a profit of 2.75%. Currently, current position that I have left up 4.99%. And of course, my end of day stop is a close over the 200-day moving average. If it next week we continue to move down, I'll continue to take partial profits. If we get to a 35 RSI level, then the 5 EMA will come into play. If we reject the 30 RSI, I'll cover half. And then if I get a close above a previous bar's close after rejecting the 30, then I'll be completely out of the trade. But this has been a great trade, great example of being patient, waiting for confluences of signals to happen, position sizing correctly, taking partial profits, having an emergency stop, having an end-of-day stop, basically knowing what you're going to do regardless of what the market does, because no one knows what the market's going to do, but you have to know exactly what you are going to do. So anyway, nice trade there. Remaining shares up 4.99%. Pfizer. All right, well, this here is called a higher low V1, one of my favorite approaches. The rules here, you see the two green lines. This is called the value zone. So the first requirement for a higher low V2 is you have to close underneath the value zone, which you can see we did here. Then we rallied into the value zone. Then we came back, and then we formed a V1. A V1 consists of two bars, bar 1, bar 2. Bar 2 has to go below the low of bar 1 and then close above the close of bar 1's close. But you see how this low here is higher than this low? And by the way, if you want to learn more about V1s, V2s, you can go to my YouTube channel. There's a free video in the lessons playlist called V1, V2 entries. One of my favorite approaches, really the bread and butter of my trading. Of course, I teach this in my one-on-one course, of course, because it's such a huge, important part. But if you'd like to learn a little bit more about them for free, just go to the YouTube channel, go to my YouTube channel, Gossett Trading, and look for V1's V2 entry video. So, excuse me. So here's the V1, bar 1, bar 2. Bar 2 goes below bar 1's low, closes above bar 1's close. Got long here, 35.43. Now, I position size. As I mentioned before, I place my emergency stop 2 ATRs below. Now, on a V1 or a V2, the stop is just halfway of the washout bar. This is the washout bar. Bar 2 that went below the low of bar 1, closed above. That's why I have this pink line here. If in the future it closes below halfway of this bar, where the pink line is, then I'm simply out of the trade. So I position size, I wait for the entry signal, I position size, I place my emergency stop. I know where my end of day stop is. I place my 1.5, place my trailing stop level 1.5 above my entry. And then, of course, if it moves the value of 0.45 ATRs from the previous bar's close, I get out of partial profits, right? I want to get while the getting's good. While the market's offering me something, I'm going to take something. So got long here, 35.43. Next bar just rockets up. Took 20% off of the trade on this big bar. You will never see me not take a profit on a big bar that goes my way. So took partial profits here. actually got to trailing stop level as well. So now I'm in trailing stop mode. It doesn't mean that I do anything. It just means that I'm in trailing stop mode now. So if I get a close below a previous bar's low, I will get out of half the position. Next bar moved up, but it did not move up enough for me to take any profits. Next bar moved up again. I did take some more profits off here because it moved the value of 0.45 ATRs. Now remember, I'm in trailing stop mode, so in the future, if I get a close below previous bar's low, I'm going to get out of half. We had 2 days of sideways motion. And then here on the 24th of August, I had my first close below the previous bar's close. After reaching trailing stop level, I took partial profits off here, so I don't have the full position. But here, when we have the close below the previous bar's low, I get out of half of the remaining shares that I had. Got out with a profit of 1.96%. Next day moved up again, took some more profits, sideways. Next day moved up strongly again, took more profits off while the getting was good. Then we had a couple down days here. You can see Thursday got kind of close to my trailing stop level, but did not close below it, so I stayed in the trade. And then today it was up 1.16%, so I continued to take more profits. So this particular trade with the remaining shares, currently up 0.98%. Not bad, but of course, just want to point out it's important that I took profits while the getting was good and that I had a plan where I got out of even more here, half, as a matter of fact, below the previous bar's low after being at trailing stop level. So nice trade there, GDX. All right, this is also a higher low V2 situation where we closed below the value zone. We came into the value zone, and this is a V2. The previous chart I talked about a V1. This is a V2. V2 consists of 3 bars, bar 1, bar 2. Bar 2 goes below the low of bar 1's low, and then bar 3 closes above the bar 1's close. So that is my entry. Took the entry, position size, placed my emergency stop 2 ATRs below, end of day stop, closed below halfway the washout bar. Next day, moved up, took some profits off. Next day, moved up again, took some profits off. And you see how we got to trailing stop level, the orange line, that puts me into trailing stop mode. And if I'm in trailing stop mode, then a close below a previous bar's low, I'm out of half. Next day, that happened. Close below previous bar's low after reaching trailing stop level. Locked in half the position at a gain of 0.89%. Today, gapped up, went up, took more profits, partial profits off at the very top before it reversed. So you see why taking those partial profits is really nice. So the remaining shares that I have on here, not up much, up 0.31%, but still the important part is that I took profits here and here while the getting was good, and a profit here today at the top while the getting was good. But nonetheless, this particular trade still up 0.31%. Nike. Next trade. All right. Nike is what's called a deep dip buy approach. And I took this trade back here on the 28th of August. Why did I take it? Well, the previous day, the RSI closed below 30 RSI. On the day I took it, it closed above 30 RSI. That's my signal. Close under, close over. Again, this is something that I teach in my course. Deep dip buy under 30 over 30. So I position size, I wait for the signal, I position size, I place my emergency stop 2 ATRs below. And then my end of day stop, well, my end of day stop, it's usually the opposite of why I took the trade. I took the trade because it closed under 30 and closed over 30. Therefore, in the future, if it closed below back below 30, then I would get out of the entire position. But luckily, it went my way. You can see the orange line up here. What is that? My trailing stop level. If it reaches that, now I go into trailing stop mode. So bought here at 99.63. Next bar right away moved up, took partial profits. Thankfully for that. It actually hit 2 profit targets on this particular day. Next day went up a little bit, but not enough to take profits. Next day sideways. Today, you can see we were up again, took more profits off again, continuing to reduce my position size, reduce my risk, right? And we hit trailing stop level. So now in the future, if I get a close below a previous bar's low, I'm going to take half of the remaining shares that I have off. If it continues to move up, I'll continue to take partial profits. Now, with an under 30, over 30, there's some kind of important rules. In the future here, we're at a 44.15 RSI. If I reject the 50 RSI, I'm going to get out of half of the trade. If I reject the 50 SMA, I'll get out of the other half of the trade. And if I get a close below a previous bar's low, I will also get out of the trade. If two of these three things happen, I'm completely out of the trade. And these are the exit rules for an under 30, over 30. I know it sounds complicated, but it's really not. But this particular trade, doing quite well. Entry to current price up 2.67%. McDonald's. All right. This one, not a winning trade at the moment, but still in the trade. Again, this was a higher low V2. Close below the value zone. In the value zone, pull back, V2, bar 1, 2, 3, 2 goes below bar 1's low, closes above bar 1's close. Got long here, 282.60, position size, emergency stop, 2 ATRs below. End of day stop on a V1 or a V2 as it closed below halfway of the washout bar. Here's the halfway. Do you see how today we went below, but by the end of the day, we closed back above and it kept me in the trade? That's the key. I wait for the end of day to make my buying and selling decisions. During the day, it was below, but that halfway level is an important level. So I kept it. But this particular trade at the moment, down 0.58%. And Monday, well, not Monday because the market's closed on Monday, but Tuesday, if we do close below halfway of this washout bar, this pink bar here, I'll simply be out of the trade quickly for a small loss. Right? So this one down 0.58%. And then the trade of the week was Tesla. You know, I just did a video on my YouTube channel about why abandoned babies and island reversals are my favorite new setup. And again, this is something that I teach in my course. But look at this trade. Do you see the bar here with the blue background? This is called an abandoned baby. Why is it called an abandoned baby? Because it's by itself. It gapped down to the left, and then the very next day it gapped up. See how it's kind of hanging here in space? So that was my entry signal. These are very, very strong signals. Of course, they don't work all the time, but they are extremely strong signals. So on this particular strategy, I've made this very simple. When I have an abandoned baby or an island reversal, I enter. I entered at 221.70 at position size. It's the exact same way. Take 1% of my capital, divided by the value of the 2 ATR. That, in this particular strategy, I'm either going to lose or make twice what I've, let's just say that my maximum allowed loss on this was $1,000. One of two things is going to happen. I'm either going to just lose that $1,000 or I'm going to make $2,000. So when I enter after the abandoned baby, my maximum allowed loss is 2 ATRs below. My maximum gain is 4 ATRs above. So 4 ATRs potential profit, 2 ATRs potential loss. That's a 2-to-1 risk to reward ratio. I'm not scaling. I'm not doing anything. And this worked out great. Got in at 221.70. You can see my profit target 4 ATRs above, and 1, 2, 3, 4, 5, 6 days later, nailed it. Got out for a gain of 13.85%. It continued to try to go over, and then of course down big today, down 5.06%. But what a great trade! What a great trade, up 13.85%. All right. So real quick recap on the daily. Short Zion's current shares up 4.99%. Pfizer current shares up 0.98%. GDX up 0.31%. Nike up 2.67%. McDonald's down 0.58%. And Tesla up 13.85%. So, if you see me in a trade for a long time, it's because it is doing well, not because it is doing bad. If it's doing poorly, I'm out quickly. So that's why you almost always see my winners 2, 3, 4 times what my losers are because of that strategy. Okay, so that's the review on the dailies. Let's head over to the weekly trades. All right, here's XLF. I've been in this trade for a long time, and what does that mean? That means it's profitable, right? I got into this trade all the way back March of 24, beginning of the year. Why did I get into the trade? Well, you see the purple line here, 250 week moving average. These are weekly bars now. It rejected it, closed above. My entry was $30.71. I position sized. I placed my emergency stop 2 ATRs below. My end of week stop is simply a close below the 250-day moving average. I place my trailing stop 1.5 ATRs above. And then, of course, as it moves up the value of 0.45 ATRs from the previous bar's close, I take partial profits. So here we moved up. I took partial profits. Next week, nothing. Next week again, moved up strongly, took more partial profits, also got to trailing stop level, which means if I get a close below a previous bar's low, I get out of half. Never happened. You know, a month and a half went by here with really nothing happening. But then we started to move up again, took some profits. Then this is my first close below a previous bar's close after reaching trailing stop level, sold half of my position at the moment for a gain of 6.4%. And then we had 5 weeks of up moves, more profit targets, more profit targets, more profit targets, right? Taking advantage of the market as it moves my way. And then we had a couple bars down of downwards movement, no profit targets, obviously. And then this week was up, and I hit another profit target because look, the value of the 0.45 ATRs is 47 cents. So if it moved 47 cents from the previous bar's close, I would get out. It moved up 70 cents. So I took more profits off. So I'm continuing to reduce my position size as it goes my way. And then, of course, if it gets to a 65 RSI level, then the 5 EMA will come into play. If it rejects the 70, then I'll get out of half. Again, all the stuff that I teach in my one-on-one course. But it's such a nice feeling to know exactly what you're going to do regardless of what the market's going to do. And the remaining shares on this particular trade, doing really well, up 11.42%. Last but not least, XLRE. Took this trade back here on the 2nd of June. This is a higher low V2 configuration. Close below the value zone, into the value zone. Pull back, V2, bar 1, 2, 3. 2 goes below the low of bar 1, closes above the close of bar 1's close. Got long here, 36.62. My stop is a close below halfway the washout bar. My emergency stop, 2 ATRs below. Place my 1.5 ATR trailing stop level up here. And as it moves up, I'm going to take profits. So here, took some profits. Next bar, took some profits, had a big bar down, but it did not close below halfway the washout bar. You see how price tends to really hold halfway of those bars? That's why it's at a great stop. Then we had a rip-roaring week up, hit 2 profit targets, and then more profit targets, more profit targets. Then we had moved down. You can see how it came almost to the penny, to the halfway of that washout bar, but didn't close below, closed above. 2 weeks ago, went below, but then closed back above. Kept me in the trade, and this week we went up, and I hit another profit target. So the remaining shares on the percentage gain on the remaining shares here, up 1.86%. So real quick, XLF, remaining shares up 11.42, XLRE up 1.86. Again, if you watch this channel, if you watch this podcast, you will see that if I'm in the trade for a while, that means I'm doing well. If I'm out quickly, it means it didn't work. So that's why you will almost always see my gains being much larger than my losses. And that's the key part of trading, everyone. Being very impatient when you have losers and getting out quickly, getting your ego out of the way and just getting the hell out of there. And then equally as tough, staying in the trade when it's working. I know it feels good to take profits, but honestly, the only way to make money in trading is giving those winning positions some room to run and having a process that you don't have to make an impulsive decisions like, I'm out, right? Just A computer could trade this, and probably better than most people, right? So again, I teach all these setups, I teach all these processes and rules in my one-on-one course. So you should consider contacting me, taking this course. I know you will be happy if you take this course, and you're going to learn a lot. Okay, so that's the review. Nice results this week, definitely. Let's do a little bit on trader psychology. This is from Michael Lamott. Great channel to follow over on X or Twitter at Michael G. Lamott. He's a great trading coach. He's a great author. He's interviewed me a couple times on his podcast. I've done a review of one of his latest books. It's a great follow. Do yourself a favor. He posts really great things about trader psychology. And let's see what he has to say today. The market is an infinite stream of opportunity. Believe this, and you'll stop chasing trades. There's never a need to rush. The market is an infinite stream of opportunity. So I talk about this all the time, and Michael is right. There are so many setups that can come along, and you just have to be patient and wait for those setups that have an edge. People say, what's an edge? Well, best way that I like to explain an edge is, I say an edge is a pattern that if taken 100 times, you're going to win more times than you're going to lose. So therefore, inherently, there is an edge to the approach. Whether any of the approaches that I trade and teach, like deep dip buys, higher low V1s, V2s, return to value V1s, V2s, double bottom bullish divergences, moving average crossovers, I'm not going to put money at risk unless there is an edge in the approach that I am using. Doesn't mean it's going to win and be profitable every time. It just means over time there's going to be more profit than loss. The same with a casino. They don't win every hand. They don't win every toss of the dice or roll of the roulette ball. Obviously they don't. But over time they have a mathematical edge where they make more money than they lose. And it's the exact same with trading. So the market is an infinite stream of opportunities. Believe this, and you'll stop chasing trades. There's never a need to rush. Trades come around all the time. Just be patient, wait for them. So thank you, Mike. I appreciate that. And then let's head over to some potentials for next week. All right, so first on deck is Walt Disney. So this looks pretty grim, doesn't it? You know, put this in perspective. Look, at one point, Walt Disney was about $202. Now it is $81. Can you imagine? Well, it's low, but does that mean we just go ahead and get into the trade? Well, I guess you can if you want, but if it were up to me, I'm going to wait for some kind of signal to get into the trade. We have some potentials here on Disney going forward next week. Now, we're at a 34.05 RSI. I would be interested next week if sometime, it's not there yet, if we go under 30 RSI during the day and then perhaps close over. That would be a potential entry for me. Or if we close under the 30 RSI and close back over. So those two potentials for next week, under 30, over 30 during the day, or a close under the 30, close back over. That would be a legitimate signal. Then I need to position size, place my end of day stop, place my trailing stop level, place my 1.5 ATR trailing stop level, start phasing out as it goes my way, like I showed you in the other trades. The other potential, and you've heard me talk about abandoned babies and island reversals. Well, anytime you have a huge gap down like this, you have the potential for a gap up, which would create this and make this an abandoned baby. So basically, next week, on Monday, for the abandoned baby, Monday only at this point, if we close above 82.24, or open above, excuse me, 82.24, then we would have an abandoned baby. But it has to open above today's high. It would have to open here leaving this as an abandoned baby. And if that's the case, then I'll do what I did with Tesla. I'll position size, I'll place an emergency stop 2 ATRs below, and I'll place a profit target 4 ATRs above. I'm not going to scale. I'm not going to do anything. It's OCO. One cancels another in the system. So I'm either going to hypothetically lose $1,000 or make $2,000, right? Good risk to reward ratio, 2 to 1, but based upon I'm only going to do this if we gap above today's high, making this an abandoned baby. And, I know Walt Disney has been out of favor. I don't think it's going out of business anytime soon. And I would love to be able to get into Walt Disney for this trade, either with an abandoned baby if it gaps open today's high, or, like I mentioned before, if we go under 30, close above 30, or intraday reject the 30-hour size. So two potentials: open above the high of today's high. It'd have to open above 82.24. That would give me an abandoned baby. Or alternatively, if it goes down under 30, over 30, intraday rejection, or close under, close over 30. So that's my plan on Walt Disney. INDA. Well, I am looking for potential abandoned baby to the downside. We gapped up. So therefore, if we gap down below, what's the low here? 44.15. Then I would get short 44.15, but only if we gap below 44.15. And it may not, probably won't, but if it does, that would create an abandoned baby to the short side. Really great news to the upside, but if it gaps below here, then we've had great news followed by bad news, and that's probably going to be bearish for the stock. So potential for me on INDA is if we gap below 44.15, I would get short. I would have a 2 ATR stop to the upside, 4 ATR gain to the downside. Johnson & Johnson. What I'm really looking for here on Johnson & Johnson is it to go lower and reject the 30 RSI level. We're at 35.09. I want to see it go below the 30, close above the 30, or an intraday rejection of the 30 RSI. That is what I'm looking for on Johnson & Johnson. Lockheed Martin, sometime next week. What's the interesting level here for me is this 300-day moving average. I need it to come down, close under the 300, close above the 300, or intraday reject the 300-day moving average. That is what I'm looking for on LMT. Rio Tinto, another potential abandoned baby. Not likely to happen, but if it does, I would consider. The low is 63.47. 63.47 right here. If it gaps below that low, then it's an abandoned baby to the downside. Let me show you. I'll just show you how strong these are. No, not Tesla. UNG. This is a perfect example. Here's an abandoned baby. We gap down, we gap up. I took this trade. 2 ATRs below, 4 ATRs above. Look at that. Went straight up, hit it. And then look what happened here. An abandoned baby to the downside. I did not take this trade. I wish I would have. But you see how powerful these are? Abandoned baby to the upside, moved right up. Abandoned baby to the downside, gap on the left, gap on the right, moved right back down. Isn't that amazing? Isn't that amazing? So look out for abandoned babies. Look out for island reversal bars. And if you'd like to know more about them, in my playlist on my YouTube channel, I have a video where I go into more depth on abandoned babies and island reversals. So back to Rio Tinto, potential if it gaps below today's low, I would get short on an abandoned baby. United Airlines. Well, United Airlines is setting up for a potential higher low V2. Let's see the close here, 49.81. 49.81. Right here. Potential higher low V2. Close below the value zone. Move into the value zone. We have a potential V2. Day 1, day 2, Day 2 goes below day 1's low. Day 3, Monday only, would have to close above 49.81 to give us a higher low V2. So Monday only for me, potential if it closes above 49.81, potential long, higher low V2 long on UNG. VIX, look at this move down. Unbelievable. This is volatility. No volatility in the market. The market is scared of nothing. Well, trust me, VIX will go back up at some point. There's always volatility. Things go from not volatile to volatile. Right now, they're not volatile, but they will go up. Does that mean I want to buy it right here, right this second? No, I don't. But we're at a 33.79 RSI. What I would be looking for next week would be an under 30, over 30, or a close under 30, close over 30. MACD is still green, which is very, very interesting. So this is what I'm looking for. Next week, some type of rejection of an under 30, over 30. Next, XLU, potential higher low. Oops. Let's see, close there, 62.96. Oh, yeah, I got it. All right, close under the value zone, the green lines. Go into the value zone, pull back. Monday only, if we close above 62.96, it would give a higher low V2 in the value zone. But Monday only, okay? MACD is also green, so that's what I'm looking for. And then last but not least, XLV. Look in the past. Black line is the 200-day moving average. It closed above it, respected it, went up. Came back down, tried to go below it, closed above it, respected it, moved up again. Here, one day closed below, closed back above, moved back up. So the market has been respecting this level of the 200-day moving average. So next week, if and only if we have a close under the 200, close back over, or an intraday rejection of the 200, or alternatively a bounce at the 200-day moving average, I would also consider that. So let's go through it real quick again on the dailies. What I'm looking for, Disney, gap up above 82.24 would give an abandoned baby. Alternate to get long. Alternatively, if it goes down, rejects the 30 RSI, also another place to get long. India, INDA, if it gaps below 44.15, I would consider a short. Johnson & Johnson, if we continue down, I get an under 30, over 30. That would be my level to potentially get in. Lockheed Martin, if it moves down further and has a rejection of the 300. Rio Tinto, if we have a gap down below 63.47, I would consider getting short. United Airlines, Monday only, if it closes above 49, not Monday, but Tuesday, excuse me, because of the holiday. If we close above 49.81, I would consider getting long. VIX, if it continues down and get an under 30, over 30, I would consider getting long. XLU, Monday only, if we close, Tuesday only, sorry. If we close above 62.96, that would be my entry, but Tuesday only, close above 62.96, and then again, healthcare, if we have some kind of rejection of the 200. Now, there's a possibility that all these setups could happen all at the same time. So does that mean I would take all of them? No, I would not. I'm only going to take one trade per day on each particular time frame. And how do I decide? If all of them trigger, how do I decide which one I'm going to take? I have to look at the big picture. What's the risk to reward ratio? How many confluences or combinations of entry signals or triggers are happening at the same time? What does it look like on the higher time frame? I also consider that as well. The relative strength of that particular market compared to the rest of the market that day. These are all the things that would help me narrow down to the very best one of that day. I know it sounds complicated, but it's really not. But again, this is what I do teach in my one-on-one course. It is a 15-hour course, 5 sessions. Each session is 3 hours long. So it's an extensive course. It's just you and I. I take you through every single strategy. I throw a lot of curveball questions at you. I want to make sure that you really understand every strategy. And so, if you decide and consider to become a student, just know there's work involved here, but you need to work hard for things to pay off. And that's what I teach you in the course. So definitely consider it. So those are my potentials on the daily. Let's go to the weeklies. Not a lot on the weeklies, but look, here we go. Now, weekly bars close on Friday, everyone. So this would be, if this happens, only on next Friday. Well, Disney was also on the daily as well, remember? But it's also potential on the weekly. So when I start to see a stock that has potential entries on a daily and a weekly, I know probably something's about to happen. And so this is a potential weekly trade on Walt Disney. What I'm looking for? Well, look at the RSI, 33.47. So next week on Disney, on Friday, if during the week we went under the 30, over the 30, I would consider taking the trade. Etsy. I've been talking about Etsy for a while, but it has not triggered here. I'm looking for an under 30, over 30 next week. So it would have to have gone under 30 and then close back over 30 to consider taking Etsy. And then look at this. Here is VIX again. I talked about it on the weekly, on the daily, excuse me, and now I am talking about it on the weekly as well. 27.73. If it closed above the 30 RSI next Friday, I would consider taking the trade. So real quick recap, Disney looking for an under 30, over 30 for a potential entry. Etsy looking for an under 30, over 30 for potential exit entry. And VIX, if it closes back above the 30, potential entry. And again, these could all trigger. Doesn't mean I take all three of them. I would only take the one that looked the best on multiple time frames, had the best risk to reward ratio, had the most confluences of signals. Okay, so that's what I'm looking at next week. Let's real quick look at the market, shall we? Something that's kind of interesting that I wanted to point out here. You see I have the two orange lines. What are those about? Well, there's a gap. If you look back in time here, back to about August, we had a big move down that left this gap, the low of this bar and the high of this bar. This is the gap. So we changed market structure to the downside. Now we've rallied back up. Now we are inside of this gap, which makes me bearish. When you move back into a fair value gap from the left, there's a good chance that's going to fail and come back down. So that kind of colors my lenses of the markets to potentially be going down next week, because we've obviously had a huge market rally, but we've come right into this gap, this kind of golden gap right here. Doesn't mean it has to head back down, but this is what I'm looking for. When you have a gap and you break structure to the downside and then you move into that gap, more than likely you're going to head back down. So keep that in mind. Doesn't mean it's going to, but it's potential. SPY, you can also see here's a gap back here from August, very similar to the NASDAQ, and we've come into the gap, and that is kind of where we failed. You know, it's interesting. If you look at back to the Qs, you can see we tested that top gap and reversed quickly. So it makes me a little bit on the bearish side. I mean, I'm still going to take my long positions if I have them. Let's look at something else here, kind of big picture, macro. Look at bonds today. They got hammered, down $1.79, down 1.85%. That is not good. If bond prices go down, that means interest rates go up. So essentially, as bond prices have moved up, that's good for the market because that makes interest rates lower. But here we had a huge move down. We almost had an abandoned baby. Not quite, but almost. So this is not good for bond prices, which makes interest rates go up. Interest rates going up is not good for the market. So with the Qs and the SPY being in that gap and then seeing what TLT did here to the downside, that also makes me a little bearish. And then let's look at the dollar. A strong dollar is not good for the market. Hey, look at this. Abandoned baby. We gapped down. We gapped up. I didn't take the trade. I wish I would have. leaving the abandoned baby to the downside. And then look, so far that would have been a great trade. So if you look at bonds, if you look at the dollar being strong, if you look at the S&P and the NASDAQ being inside that gap, this all leads me to be a little bit bearish on the market. So please keep that in mind. Always trade carefully, right? So, you know, I've talked a lot about my one-on-one course. If you're interested, just email me. My email's in the link in the description. The course costs $1,750, but it's worth every penny. You're going to learn a ton. Like I said, I've been trading for 28 years. I've taught people from all over the world, from absolute beginners to serious hedge fund managers and everywhere in between. So if you're interested in learning the skill of trading, I can really help you with that. And all you have to do is send me an email. If you like online courses, I have an alternative. I have a great online course called The Deep Dip Buy Stock Trading Approach. It's available on udemy.com. It's very affordable. It's between $12 and $15. I've gotten so many good reviews and feedback on this particular course. So if you are interested in that, it is in the link in the description, the Udemy link. And then if you like today's podcast, if you found something valuable, I would really appreciate it if you could just take the time to hit the thumbs up button. Helps build the channel, helps keep the channel around, lets YouTube know that there's some valuable content. And I do try to provide as much as I can on this channel, and hopefully it is helpful for you. So in return, all I ask is that you hit the thumbs up button. And then last but not least, but most important, please try to go out and try to do something nice for someone today. Just one random act of kindness each day. Can you imagine if everyone in the world just did one random act of kindness? It would really make the world a better place. And if you could also try to do one nice thing for an animal each day, they appreciate it. I grew up with a lot of dogs and cats and ponies and ducks. You know, I'm a huge animal lover, and they appreciate acts of kindness as well. So if we could do one nice thing for a human, one nice thing for an animal each day, just imagine how the world would be a better place if we could all do that. And let that start with you. So I really appreciate you being here. I appreciate you taking the time. I hope you found it helpful. I hope you have a nice, long, extended holiday weekend, Labor Day, and that you enjoy, get some rest, have some fun. And Monday, not Monday, I keep saying that, Tuesday, the market opens and we'll be back to business. So thanks a lot, everyone. Really appreciate being here. On the way out, I have to run the U.S. legal disclaimer, and we'll talk to y'all soon. Thanks a lot. Bye-bye.
U.S. government required disclaimer. Stock option is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.